Ken Foker. I'm licensed insurance agent based out in Oklahoma, Tulsa, Oklahoma. I'm trying today to help out the families who will be looking to get insurance and trying as much as possible to save more money and get you the best benefits that you could actually, make out of every dollar that you put in into an insurance policy. So again, my name is Ken Fokker. I'm a licensed insurance agent. I've been in this industry for like just about 2 years right now, and it's quite an interesting journey it's been for me so far. Originally, more with the customer service experience background, I moved into life insurance, just moving into America, and realized how important a need that would be for many families in the future going forward. And that caught my attention, especially after my own personal experience losing both parents and not having any coverage. It kind of opened up my eyes to see how important this insurance can be play a role once that unfortunate moments come along, losing a loved one and then having to worry about the financial burden that comes with it. Now, if you do have a policy, that would seem to be a very different experience altogether, because you know for sure the policy pays out and that is taken care of, at least from the financial aspect of things. And you do not have to be mourning your loved one while worrying about what the financial burdens would, in putting them away, would bring along. So that's something that I would say you should. If you do not have a policy right now, you want to go ahead and look at the options that are available for you, and keeping in mind the insurance is typically going to be based on your need. So if you would look at it from the angle of what do I really need to cover in terms of an insurance policy, the needs can be seen as a permanent or a temporary basis. So if you would have a need temporarily, then it will be something that would say, okay, you have a debt, for example, it ends for X amount of years. Typical example would be your mortgage, right? In your mortgage, you're taking it out for 15 to 30, 25 years. So that need for coverage for that temporary situation would be for a period of, say, 30 years, which is the lifetime of the mortgage, right? So as soon as you know for sure you've paid up that mortgage, then that need also cease to exist. So that policy would automatically also come to an end as the need goes away. Now, if we look at it from the perspective of what we would say a permanent need, or what you would always hear insurance referred to as whole life, then or final expense will be a typical name you would hear for many other policies. That will be something that you know for sure you would need for the rest of your life, because we all will eventually, at some point in time pass away. And once that happens, then the policy pays out to help out in, taking care of your final expense or funeral expenses as it's supposed to be intended. And if there are some, outstanding benefits, then your loved ones would at least hold on to that in what we would call an income replacement sense of the point of view. So it means whatever extras that you had in the policy could become some sort of a cushion for the that void that your living or your passing has created in the budget for the family. So looking at it from that angle, you would see that this permanent need is typically what I would say everyone should have a permanent policy, and as well as a temporary one if you would have a need for it. So it's really more of if there is a need rather than if you just want to, you know, leave your family a legacy. That's also something some people would like to do, but I always advise to go with what is affordable and where the need really exists. So just don't take out a policy because you think, okay, I want to, amass wealth or whatever. I mean, if you have the resources, of course, it's a great idea, but As an agent, I always try to use that affordable aspect to, appeal to the need for a client. And today, I'm actually going to be focusing more on what is your traditional insurance policies would be very straightforward. They will put an X amount of dollar for a particular rate that you will pay on a monthly basis on the condition that if you were to pass, that amount of money will be paid out to your beneficiaries or your loved ones that you have stipulated in the policy when you took out the policy. Now, I'm going to stretch that aspect of the insurance policy in more detail. That way we can see how you can equally use that as a means of getting some other aspects of your need as you grow older taken care of. In this particular topic I was selecting today was the long-term care need. Considering how important, and how grave a concern this is going to be, or at least it's becoming already in the nearest future, what you could do as a strategy to take out a policy is you could actually incorporate the aspect of long-term care into your insurance policy. And that way, as you grow older and the need for long-term care comes along, the policy automatically also takes care of that need for you. So you do not have to worry about, oh, how am I going to, afford this? How am I going to pay for this? Especially once you hit that retirement age where you're kind of moved into a fixed income. And once you're on a fixed income, your room for flexibility with what you can do with your budget becomes really, really tight. So this is where I think I can, maybe educate you, and we could get to learn and help make a very huge long-term plan for the future with you integrating your life insurance policy and your long-term care needs into one policy. And this is actually possible because of what is nowadays known as insurance with living benefits. So living benefits are simply the same benefits you would get from an insurance policy. It's called a death benefit. So that means if you were to pass away, that amount of money that is paid out is called your death benefit. Now, most of the insurance policies have actually come up with a brilliant idea, which is to incorporate benefits that you do not have to pass away to get that benefit paid out. And a typical example would be like, you were getting critically or terminally ill. That's a classical example. And then you have your insurance policy paying out some money to help you take care of your situation. So that money which is paid out is then referred to as the living benefit. The actual terminology for that is accelerated benefits, because it's actually paying out before you're passing away. So the good thing about that is, with that acceleration of your death benefit, you can actually put that money into very important use for care, like a long-term care need, which is what I would rather focus more on, because there are many other things you can do with the living benefit pay once it's payout. Yeah, you can actually use it for whatever you chose to do with it that will help in your situation once you're declared terminally ill, or having a chronic illness, or being critically ill. Those are the three conditions that will permit that. What would say trigger that acceleration of your benefit. So I'm going to go ahead and just expatiate a little more on how we can take care of that living benefit as a long-term care need. That's what I'm going to focus on this topic today. So we can see how important that aspect of life insurance can really be once you're planning to take out a life insurance policy. So we will use a classical example of someone who, say a family with two kids, and they're just about mid-50s and approaching that retirement age, and they're considering, okay, what do we do? I mean, we are getting into the last phase of our working life before we go into retirement. Typically, most of you would go out there and take a typical what they call a retirement plan and put in some money in there, hoping that once you retire, you can drag onto that savings and take care of your need. However, that's usually not the case because it becomes really expensive. As you can see, the cost for taking care of long-term care needs is continuously growing every single day. So that poses a very huge challenge. I mean, I was just looking at the recent data from the industry, and it shows here that at least 10,000 baby boomers, so people who are in their 60s and entering into the 70s, 10,000 of them are going into retirement every day as we speak. So look at that number in terms of how many people will be needing long-term care need. So the data says 70% of people who would need long-term care. So that said, put it into perspective. So we're having an exponential calculation here. Say every day we're having at least 10,000 going into retirement, and 70% of that 10,000 will be having a need for long-term care. Now that puts us in a very, very serious condition here, because that's something that would need to be taken care of financially. Considering that the cost for long-term care need, if we would just look at the data, for 2013, the average annual cost for long-term care was $75,000. I'm talking here of just a typical someone who has been on long-term care need for annual basis. That would be a $75,000 cost per year. So that if you break that down, that's like $6,000 every month, and $2,100 to $210 every day. Now speed that up into 2020, that just left us with all its challenges. That amount kind of increased to $315 a day to or $9,400 in a month, and in a year $113,000. So if we put that into perspective, looking ahead, another 20, 30 years, say in 2027, that amount will move to like $420 per month and $12,000 a year, and that will be about $151 annually. So you can put that into perspective and see how much you would need to save if you were to go and plan ahead, like take care of long-term care needs, that you will be needing at least $151,000 every year to maintain your living conditions. If you were having a need, of course, that's keeping that in mind. Now, if we move that forward and see that, okay, what if I could do a policy that allows me to, incorporate the long-term care need into the policy? So that means your life insurance pays out something if you were approaching a need for long-term care. There are lots of careers that would do that for you, that would provide you that possibility. So I'm going to use an example here of someone at 55, like I mentioned, a family of two children, and in their mid-50s. Now, considering their long-term care needs, they're just kind of thinking like, okay, what can we do, to cover the eventuality of having a long-term care need? So they say, okay, let's go out there and take out a $500,000 policy. Now, that $500,000 policy will say, it pays X amount of dollars in a month for the premiums. But what you could equally do in that same choice of your policy is to incorporate what we'll call then the long-term care need into that policy, which basically is like saying, okay, in the event that you would have a long-term care need, then that accelerated benefit that I mentioned earlier kicks in, and then the policy pays out percentage of your benefit to take care of the long-term care need. Typically, that will be between 1 to 5% of your total debt benefit. So let's use this example of $500,000. So let's say they had a long-term care need and the accelerator benefit was triggered. The policy starts to pay out a 4% on that $500,000. Now that's on a monthly basis. So you're talking of at least 50,000 that you can actually draw on to take care of your needs while the need arises, right? So you can see how much of a big huge difference that will make if you were to go into your savings and take care of that long-term care need that has arisen. Now, if you use the policy living benefits rider as a long-term care need, there are some things you need to keep in mind. Now, keep in mind that that money that is paid out is drawn out of the death benefit of 500,000. So in the event that you would use some part of that and take care of your long-term care need, now the balance of that death benefit will be a deduction of the total amount of money that you've drawn from the policy as an accelerated benefit to take care of your long-term care need. So what remains from that $500,000 in the event of your passing is exactly what will be paid out to your loved one or your beneficiary in this case. And that's of course income tax free. So it's a great aspect of a life insurance policy. So imagine you had used, say, for the long-term care need, you used like 25% of the policy. We are talking of at least still very good amount, well over $475,000 paid out still to the family. And they don't have to worry about the bills that you had to go through in your, typically with your final days, once you get diagnosed with a terminal illness like cancer or a heart attack or a stroke, the bills just keep going exponentially up, right? Now, if you have a policy like this what this does is it gives you a possibility to cover that need there that would, otherwise be a burden for your loved ones, in the event your eventual passing away. They would have had to take care of those bills that will come with your hospitalization and then all that medication and all, you can name it. It's a crazy amount of money that you have to worry about. Plus, you also have to think about putting them away when they eventually die. And then, of course, if you would have the option of, taking out a policy that could take care of that need and make sure that you do not have to worry about the cost for, hospitalization, medication, name it. Plus, the putting away of your loved ones once they eventually pass away, that can be such a huge difference. It's just a smart way to say, okay, I've planned well and know for sure whatever happens, my loved ones will have at least something to fall back to, plus they don't have to worry about taking care of the bills. Now, this is where I say the long-term care need living benefit rider is a very smart policy to rider, as it's called, to integrate into your life insurance policy. So there are so many different ways you can approach that. I mean, I took a $500,000 just to show you how, you can go at your own pace based on your budget. So you should not use that example of 500,000 as a standard. You can go as low as your budget would allow. So keep in mind that money is only available if you're gonna go ahead and get to trigger that acceleration of a benefit. That usually happens once you have a critical illness or a chronic illness or a terminal illness. So there are three main aspects of that which will trigger the long-term care needs benefit or living benefits, as it's called. So once you have a living benefit triggered, all the possibilities of you using the the percentage of your death benefit in the policy now becomes available to you to, drag to pull resources from and take care of that need. So if we were just gonna wrap it up here, what I basically was doing, if you're just joining, what I basically did today was kind of like, take a look at what you could do with the life insurance policy in terms of planning against eventual terminal, critical, or chronic illness, and of course, long-term care. Long-term care being the focus of the talk, because it's such an important need that has come along. As we all age, we will certainly be having a need for long-term care. The data says 1 in 2 people will need a long-term care in some point in their life before they pass away. So if you put that in mind, that says 1,200 people would go through a possibility of a fire accident in their lifetime, and just about 400 would possibly die in an accident. And the long-term care says 1 in 2 persons will experience a long-term care need in their lifetime. Now, interestingly, a lot of people do have insurance against fire or damage to their property or their car accident protection, right? But if you go out there and ask how many people do have insurance against long-term care need, I would tell you pretty much nobody even thinks of it that way, right? But looking at it in terms of a need, a long-term care need is a very, very, very important aspect of insurance that a lot of people do not seem to have a perspective or a good understanding of how urgent and how big a need that is. Considering that the data says 70% of retired citizens will need long-term care. Now, if you would put that in perspective, that means you would certainly have at some point in your life a need for that. So what we are trying to do here is to get to see how you can use your life insurance policy. If you do have one already, of course, it's a great thing, but you can always review that policy and integrate that aspect of a living benefit with a long-term care need into the policy. And what that does basically is it gives you the option, to get access to that debt benefit in the policy. So it helps you take care of your situation that has a reason because you're actually diagnosed with a terminal, chronic, or critical illness. Some of them actually nowadays will even include conditions that would be typical conditions that will come along as a result of a COVID extended COVID illness. They will pay out as well. So if you would have that in a policy, then it gives you such a good wide range of options to look at once such a need arises. So say you were diagnosed with cancer, or heart attack, or stroke, automatically that triggers that amount of percentage of your policy that you can actually drag on finances from to take care of the need that you would have come along because of your illness. So we can go ahead and take a look at the details if you're interested, or I can always, get in touch with you and we'll take a look at what that looks like for you. But at this point in time, I just want to, wrap this up and make this such a very long conversation. I mean, I'm going to do a couple of more live presentations like this to get to, explain those aspects of an insurance policy that I think will be very important for anyone who has never really considered taking out a life insurance policy. And if you do already have a life insurance policy, how we can help make that policy a more robust and suitable policy for you nowadays. There are so many other benefits that have come along maybe by the time you took the policy that were not available at the given time or you were not aware of. We can take care of that right now because the law allows you to, increase benefits in your policy as long as it makes a difference from what you originally have. So it will be called a replacement because you're actually increasing the benefits that comes with your policy. That's allowed in the law. Now, how we can do that, I have 3 aspects of how I can get you going with that. There is an option for you to actually go online and do that directly. And that will be if you would log on to my website. It's at www.lockaquote.com. The lock is like your lock, LOCK, and then A for Alpha, Q for Queen, U for Umbrella, O for Orange, T for Thomas, and E for Elephant, lockaquote.com. If you go onto that website, you can actually go ahead and start the application process or submit a request, as I would rather put it. That way we can take a look at your need and then craft a policy based on your need so we can get you started. Alternatively, you can call my toll-free number directly. It's at 888-569-9229. The telephone number again is 888-569-9229. Now, you can equally go onto another website that I'm actually an agent with them, where you can actually go ahead and submit your policy directly. And that will be on the website. I'm just going to read that out. If you can write that down, if you're watching right now and you can write it down, I'm going to drop all of them on the comment. But that's at the website app.back9ins.com/apply/quote. Now, if you would go onto that website, you can actually go ahead and submit all that information and get your application all started right away. You don't even have to wait to talk to me about it. We just have to show you how that works once you're in, and then we can, get you covered. So, well, I'm going to keep that really short here today. I don't want to take this beyond 30 minutes because I think it's a reasonable time for anyone who has been watching or for anyone who would want to watch this later on. It makes more sense to keep the discussion and the talk a little short. That way we get more out of it. Because if you make it too long, then it becomes a little more like something that's not easy to watch at a go. So, like I said, I'm always going to do this every Saturday, get you more educational aspects of what life insurance can do for you and how you can take that to your advantage and make great plan for your future, because that's what this is really all about, how you can use life insurance as a tool to plan against all eventual possible challenges that will come along with your life, like along the way, like I just mentioned, the long-term care, critical illness, chronic illness, and of course terminal illness. Now we can go ahead and expatiate on all of those aspects and see how you can best help yourself. So I'm just going to drop, like I said, if you have any other questions, please, you can always drop them on the comment. That will help me also see how I can better improve on this presentation. It's the very first time I'm doing it, so I know the audience will build up with time. So I'm going to keep this a tradition every Saturday morning at 11 a.m. Central Time. I'm going to do a presentation with one aspect of life insurance being a focus of the talk. That way I kind of like share the knowledge and my experience in the industry and see how I can best help you. Now, if you're interested, like I said, I'm going to drop all the websites and address on the chat. That way you can go ahead and take a look at them and get yourself started right away, so we don't have to wait. And of course, you can always call me if you would like us to have a one-on-one before you actually make that move. I would gladly help you out with this. My telephone number again is 888-569-9229. So I'm going to be very blunt here. I'm available most of the time, but if you cannot get me on the line, please do leave a message. I'll get back to you with your name and number. I will certainly get back to you. And just so you know, this is by no means in any way obligation on your part. It's really 100% your decision. If you decide to move ahead and do business with me, I'm going to get a commission for doing this as an insurance agent. I need to make that disclosure. That's what I do for a living, so I'm not in any way, I need to make you be aware of the fact that I do sell life insurance. So if I do go ahead and help you and you do sign up for a policy, the carrier that you would use would pay a commission to me. I would like to make that disclosure. But I mean, like at the end of the day, my job here as an advocate for the normal consumer is to give you the best information that you would need if you were to have a need or to take out a life insurance policy. I'm going to be your advocate. I'm going to make sure that you get the best benefits that your money can afford. And that basically is what I do for a living, helping families make sure that they get protection when they need it most and taking care of that need. So I would want to just say thank you so much if you were joining in late. Make it an appointment for next Saturday at 11 a.m. We're going to do this every Saturday and see how we can help as much people as possible to get insurance coverage. Once again, thank you so much for your time. If you joined in late, you can always review this. It's going to be on my page, Living Benefits Agent. Licensed agent specialized in living benefits is my Facebook page. You can actually always catch up on these presentations that I'll be making on that page. You would find them there all the time. That way, you can actually do a recap of what was covered and that you could not catch up on time live, but it's always going to be there. So I want to thank you again once more for your time, for taking off that time and taking a look at this. Go onto the websites, you've seen them on the chat. The very first one with the app back.9.9.9ins.com is a possibility for you to apply directly. And then the lockerquote.com is basically submitting information for a request to get me signed up with your policy. And if you would like to talk to me directly before taking out a policy, please, that is also welcome. I have a telephone number also listed in here for reference. It's a 888-569-9229. And to wrap it up here, I work with over 40 different careers. So I'm an independent broker. I work with over 40 different careers, all of them being the best out there, all A plus rated from the AM Best. We will certainly be able to find a solution for your insurance need, no matter your health conditions, because I know that's a big concern for a lot of people. And I've specialized in that to help our people with such conditions to get coverage, no matter what their condition was. So do not feel discouraged at all because some other insurance company declined you doesn't mean you can never get coverage. There are always going to be options out there for you. I would still be glad to work with you and help you out with that situation. And on that note, I want to say thank you again once more. And the rendezvous, Saturday, 11 a.m. See you again next time. Thank you so much for your time. Have a wonderful rest of your weekend. Stay safe out there.